Okay. Hello, everyone, and welcome to today's conference call. WTF is Ampleforth. I'm Luke Kerner with Crypto Oracle. We're a crypto VC, and I'm excited to be joined by our two panelists today, Stephen McKean. Hey, Stephen.
Hello.
And Derek Edward Schloss. Hey, Derek.
How you doing, Lou?
Now, I've had the pleasure of knowing Stephen, I guess, coming up on 3 years now.
I was looking back. I think it was just about 3 years ago that we did that valuation webinar with Chris Bernisky and Ari Paul and Ryan Selkis.
Yeah, that was that was very well attended, and I think actually you were also at the very first Crypto Mondays on January 8th, 2018 in New York City.
That's right.
Which also happened to be the peak market cap day in the history of crypto. So at least we were enjoying ourselves at the time. And Derek, it's super nice to meet you. The genesis of this call was actually a post that you guys wrote on Ampleforth. So I appreciate that. What was the genesis for you guys of writing the post?
Derek, maybe you could jump in on that.
Yeah. So we had been tracking the Ampleforth project for quite a bit of time over at Collab Currency. And Steve, maybe you can chip in and talk a little bit about the fun. But the project itself is something that we had been looking at for a while, and one of the things we had been looking at specifically was Ampleforth as this economic system, this economic game that needed more participants. We noticed earlier this year that there was this massive trend that was happening in the DeFi space where these communities were essentially bootstrapping their projects through incentives. And I think there's some really interesting stuff that we can unpack in there. But the idea being that, Ampleforth was starting to lean into this idea of bringing more community members into this economic system through incentives, and that ended up leading to an explosion in interest in what they were doing. And so, I think at that point, things started to really spiral, and people got very excited. There was a rush of interest into this project, and Steve and I wanted to take a beat and write about the protocol, the system, how it works in a way that we thought could help explain kind of some of the things that were happening beneath the surface. So that was really the genesis of the paper that we wrote together.
Okay. The other thing that I would add, I guess, is, it seemed there are some differences, which we'll get into here on this call, between Ampleforth and a lot of the other cryptocurrencies. And, as this thing started to ramp up, what I found is, just in chatting with other people in the space, like very knowledgeable people who are investing heavily in the space, very well informed, there seemed to be like some kind of confusion or at least lack of understanding about exactly what Ampleforth was. And so Derek and I said, hey, we've been following this thing for so long, we should just write like an explainer. And so we connected with Evan over at Ample and wrote the piece up, really just sort of like to kind of explain what it was and how it might evolve.
Well, terrific. Before we start with, I guess, your formal remarks, Stephen and Derek are going to talk off of slides for a little bit, and when they're done with their formal remarks, we're going to open it up to Q&A from the audience. So if you've got a question, you can put it in the chat function on Zoom. And if we pick your question, we'll send you a chat response back, tell you where you are in line, and we'll open up your video and your audio so you actually kind of become another panelist member. So it can really be something that's interactive. And I think that's oftentimes the most interesting part of these calls. And so with that, also, I just want to tell everybody that the call is being recorded. We'll post a video of the call up on our channel on YouTube. And we'll write a blog post about the 5 or 7 or 10 things we learned about Ampleforth on the blog, on the call that we'll post over the weekend. And with that, I'll hand it over to you guys to walk through your presentation.
Sounds good. Yeah, I have just a couple slides to kind of walk through here. Let me get these up and let me. All right, is that visible?
Yep, perfect.
Terrific. Okay, so I think what we're going to do is we're just going to start by walking through the basics of what it is, and then Derek will chat about kind of drivers of demand, and then we can just kind of move into a conversation or Q of A. Okay, so the key term that you're going to hear often with regards to Ampleforth is supply elastic. And so this is a lot different than many other cryptocurrencies where supply is basically just a preset function, right? So take Bitcoin. We know exactly how much Bitcoin on average is going to be released into the market each day. It's set in the protocol. It doesn't change. It doesn't expand. It doesn't contract according to any formulas. It's just as people do work, miners specifically, new Bitcoin is created, and it's a very predictable supply curve. So Ampleforth is different because the number of Ample changes every single day potentially in response to the price per unit. So we're going to kind of go through that in more detail. So it's a concept that, you know, Ample was certainly one of the pioneers, but we're seeing more and more of it in crypto, and we're seeing other projects adopt it. And so let's go through the basics of just sort of how it operates. So here are the rules. So every night at about 7 p.m. Pacific, the smart contract expands or contracts, all right? And what we call this is a rebase. So that term rebase is really important when you're thinking about Ampleforth. So what happens is that this is applied to all wallet balances, all right? So it's pro rata according to every single person or entity that holds Ampleforth in their wallet. When the supply expands or contracts, it is going to automatically apply to every single wallet balance in the world. And it's not an airdrop, so you don't see a transaction in your wallet. It's effectively just a function of the smart contract where the number of units in your wallet changes. It either increases or decreases depending on the direction of the rebase. So one thing to keep in mind is that after these rebases happen, you still own the same share of the network, right? So the number of you, let's say there was a positive rebase. Well, maybe you had 100 units, now you have 110 units, but that doesn't mean you own more of the Ampleforth network because every single wallet everywhere increased by exactly the same proportion. All right, so the rebases do not affect how much of the network that you own. It only affects the number of units that are in the network total. Okay, so here's how these rebases work. So,
hey Stephen,
yeah,
can you maybe just back up for a moment and discuss, and maybe it's later in the presentation, but what it is that Ampleforth is trying to accomplish through the rebases.
Yeah, so I'll get into that more, but I think just to preview that what they're trying to achieve is some degree of stability. So there's something called a target price within Ampleforth, which is a $2019, which I'll go into more in a couple slides. But the idea is that these rebases are moving the price back in the direction of the target. All right, so if the target is about $1, right, and then the price is substantially above $1, it's adding more units with the idea that that's going to move the price back in the direction of the dollar. So it's not a stable coin per se because it's not directly pegged the way a lot of other stable coins are, but there is a stability mechanism with regards to price. And so that there's a lot to unpack there, but that is the goal, right? These rebases, the goal is to move the price per unit back in the direction of the target.
Thanks.
So I think it's worth talking about kind of how the rebase works, and it's based on the market price of Ample. So if the price, as I mentioned, is substantially above the target, so 5% or more specifically, then what the rebase does is it expands supply. So it creates more units in everybody's wallet. And the presumption is that some of those units are going to get sent to market and are going to push the price back in the direction of the target. And conversely, if the price of AMPL is 5% or more below the target, so say the target's about $1, if it's trading at 90 cents, there's going to be a negative rebase, which means that the number of units in everybody's wallet declines. So here's the actual formula.
Do you know where they came up with the 5%?
So they want to create what's called an equilibrium band, right? So the idea is like, as long as it's trading roughly around $1, then we're not going to be messing with supply, right? But as soon as it starts deviating substantially, and I don't know why 5% specifically was chosen, it could have been 3% or 4% or 6%, but the idea is to create a band around the target price where it's not messing around with supply. And in the long run, I think the hope is that the sort of steady state is that it trades sort of persistently within that band.
And I mean, it's to me again. My understanding is they're trying to be a stable coin, and 5% up or down is a pretty wide range for a stable coin.
I would agree with that. And, they don't really describe themselves as a stable coin. I think they describe themselves as an asset where the price has some volatility dampening mechanism, which is going to create relative stability. But I agree with you, 5% for something that really is meant to replicate $1 would be a wide band. And I wouldn't be shocked as the project matures if there was a vote to basically tighten up what constitutes the equilibrium band.
Okay, thanks.
So just running through a very quick numerical example, let's say the current price is $2. So it's way outside the band, right? Then the idea is that if the target price is $1, then the rebase would be 10%. So if you had 100 units of AMPL, all of a sudden now you're going to have 110 units of AMPL after the rebase. And the idea is that some of those additional units people will send to market, and it'll start pushing the price back in the direction of the target. So here's a chart. And you can kind of chart where the rebase is going to happen based on, so they use an oracle to determine what this price is. And I'm probably not going to go into sort of like all the technical details, but you could kind of think of like surveying various places that the asset is trading. And if again, you can kind of look at this chart. If the price was say 241, you can kind of go up here and you can say, okay, the rebase is going to be maybe about 13-14%. So rebases are uncapped to the upside, right? And we saw in July, the price massively deviated from the target. It was up, I think, in the vicinity of $4. And so because price is uncapped, the rebases are uncapped to the upside. The downside, of course, we're truncated at 0. It can't really have a negative price. And so the largest negative rebase that could happen is about 10%. Okay, so it's worth talking a little bit more about what is the target price, because this is actually, as an economist, this is one of the more fascinating aspects of the project. And so the target price is not $1. It's actually a 2019 dollar, which means that it's going to be adjusted for inflation. And inflation is measured, in this case, by the CPI. So in 2019, the target was $1 exactly, right? But then, of course, there's been a little bit of inflation. And so now we're in 2020, and the target is now about $1.01, or just over $1.01. And over time, as we continue to record inflation as measured by the CPI, that target is going to continue to creep up. And so if you think about, the idea of using AMPL as a unit of account, it has some really interesting features there, which we'll kind of get into here towards the end of the slide deck. So what this means in terms of the equilibrium band, so remember it's plus and minus 5% relative to this target price. So if the target price is currently $1.01, that means the equilibrium band right now is about 96 cents to $1.06. And so inside that band, there's no rebasing. The number of units in your wallet stays constant. And it's only when it's outside that band that we see the number of units change. So if you zoom in right around the target on that chart I just showed a minute ago, this is what it looks like, right? So inside of this band, there's no supply adjustment. But then as soon as it kind of steps outside the band, so say $1.06 on the upside, all of a sudden you're going to see a jump basically in the function. And so there's going to be a positive rebase right there. Okay, so the big question that we debated for a long time is, do the rebases create value? And, you know, my initial reaction was, of course not, because I was kind of thinking about these things. I was trying to think about analogies from the traditional market, and my mind immediately went to stock splits, right? So many of your viewers, I think, would be familiar with the way stock splits work. Effectively, let's say Apple's going to split their stock soon, right? And let's say that a stock is at $90, and then there's a 2-for-1 split. All of a sudden now you have twice as many shares, but when they reopen trading on the stock, it opens at half the price. So like the value hasn't changed at all. So when I teach stock splits in class, I always use this analogy of a pie, right? So you have a pie and it's cut in 4 pieces. And now you use a knife and you cut it in 8 pieces. That doesn't mean there's more pie, right? It's the same pie. Now there's just more pieces, each of which is a little bit smaller, proportionally smaller. And so this was my initial mental model when I was thinking about Ampleforth is, you know, these rebases really shouldn't be creating any value because it's just taking something and cutting it into more pieces. And you know, we started chatting with Evan, we started chatting with others, and they said, yeah, the problem with that is that it's not equity, right? So like the protocol is not a company. Units of Ampleforth do not represent equity. There's no DCF model, you know, that you can use to value this thing. It's really a money commodity. And if you look at commodities, changes in supply actually do have value. And so we ran through a couple analogies in the paper. So I won't go through all the details here, but you know, effectively, if you start thinking about a commodity like cattle, right? So think about if you have a herd of cows and they give birth to 25 new cows, right? So those new cows now represent 20% of the total cows that you have. We don't immediately think, oh, my herd gave birth to 25 cows. Now all my cows are worth, you know, 80% of what they were worth before. Like that's not the way we think about expansions in commodities. If I have more cows, I've probably created some value. And yes, if everyone in the market had more cows and they all get sent to market, it might have some effect on the price. But the main point here is like, it's definitely a divergence from the way you think about stock splits, right? And so when you think about Ampleforth, you have to frame your mind around this idea of a money commodity and the idea of expansions in supply around that commodity. So another analogy we drew was gold, right? So gold is also sort of a money commodity. So this, you know, seemingly it might be similar to Ampleforth. But think about how supply adjustments happen in gold. Well, it requires some miner to go out and mine up a bunch of new gold out of the ground, right? And the point is it doesn't pro rata get distributed to all the people that hold gold. So like in our paper, I mentioned, like if I have a gold bar in my closet, and a gold miner goes up and increases supply by 1% because they mined a bunch of new gold, the gold bar in my closet is still the same size, right? Like the amount of gold that I own hasn't changed. And that's the way things work in Bitcoin, right? I hold some Bitcoin, miners, you know, do the work that they're doing, they increase supply. That supply accrues to them. Like it doesn't accrue pro rata across the whole network. And so whenever you're looking about commodities where supply expansions accrue only to the people doing the work to expand supply, we often think about stock to flow models. So you hear about stock to flow in Bitcoin and in gold and in all these different assets that have that same feature. And the reason it's really important is because the stock, like the people that hold the asset before the change in supply, are sort of negatively affected by the flow. So the flow of new units is not going to them, it's going to whoever did the work to expand supply. And so investors really hone in on stock to flow for things like Bitcoin and gold, because increases in flow relative to stock are a negative thing. And so one of the things we pointed out is like, this is not really an analogy for Ampleforth, because when Ampleforth expands supply, everybody gets it. Everybody gets it pro rata, right? So everybody's balances increase or decrease pro rata. And so you don't have to worry about stock to flow because the people holding the stock also get the flow from the new units. And then the last analogy I'll just mention very quickly are dollars. So as we know, the Federal Reserve can print more money, and there's obviously a lot of focus on that around inflation. It's also not a great analogy for Ampleforth for the same reason that when new units of currency are created, they aren't distributed pro rata to everybody that holds it, right? So maybe they're sent to citizens, like in the form of a stimulus check, and so they now hold more units, more dollars. But somebody who holds dollars in another country and didn't get the stimulus check, their units of dollars haven't changed at all by the printing of new money. So again, it's just not a great fit for the way we're thinking about Ampleforth. So I think the conclusion from this sort of analysis is that it's not quite like anything we've seen before. It's kind of like a stock split in terms of like the new units are distributed pro rata among everybody who holds existing units, but it's also kind of like commodities, like cows, for example, where it's conceivable that the new units actually have some value because they're more like a commodity than they are like an equity. And so, yeah, I think that the long and the short of it is these are mental models to think about how the rebase functions, but it's not well studied, right? Like we don't have anything like this, which I think is also the piece that makes it fascinating. So maybe I'll pause there to see if you have any questions, Lou. Otherwise, I'll just turn it over to Derek to kind of chat about, the outlook going forward, like what created all this demand for Ample in July, and kind of what do we think about when we're evaluating this project looking forward.
So in comparing it to the dollar, for instance, right, you've got the Fed, and up until the last few days, I guess, they had basically for a long time set a target rate of 2% inflation on the dollar. And so you can kind of take a look at what the Fed did in that light of trying to hit that 2% inflation rate. And here you can kind of look at Ampleforth as instead, the inflation is actually part of this. And so I guess they're looking to, and the idea of the buyers is long-term, is that they are getting a dollar that actually doesn't decrease in value over time. I guess that's longer term though.
I think that's right. So the bet for investors is that this thing will eventually stabilize, and it'll stabilize at a relatively high market cap, right? And so this is going to require it getting integrated into DeFi and other applications. And so there's still quite a bit of volatility in terms of the market cap, as we've seen. But you're correct that the idea is like, if this thing hones in on target in the longer run, then it's a really interesting play relative to inflation, because that target is going to continue moving up with the CPI, right? So if we experience huge inflation in terms of fiat, like in terms of the US dollar and consumer prices here in the US, conceivably the target for Ample would just move right up along with those increases in prices. And so 1 unit of Ample would, at least the target price would hold its value over time.
Okay, thanks.
Yeah, so I'll jump in here. So I think what Steve and I discussed a lot was, if the Ampleforth system was optimizing for this commodity money use case. It's not so much that a compelling economic product was created. And we think, there's definitely something compelling about what they're creating, but as a money, and we know about the psychology of money and how things are treated as money, the compellingness of that product needed to be used and understood by a far greater amount of people than the system had using it, a year ago. And so, the thing that Steve and I started breaking down were, what are the short-term and the long-term demand drivers to actually hold AMPL as a commodity money and use it as a commodity money and see this thing as a commodity money. And maybe that's more long-term, and in the short term, what are reasons why people would even engage or participate in this economic system, in this monetary experiment. And we broke it down into 3 parts. And I think the reason why this is interesting is because, as Steve mentioned, that going through the mechanics of the rebase, knowing that this thing is optimizing for a commodity money use case, we know that those mechanics are always going to be tempered by the psychology of the crowd, knowing that the value of money will always be a social construct. And so the 3 demand drivers across short and long term that we identified were the power of incentives, short-term speculation, and then in the longer run, AMPL's rising economic utility. So I'll just go through quickly those 3, and we can we can talk a little bit about how each of those are playing a role and played a role in kind of the enthusiasm around what's going on here. So the power of incentives came first. As I mentioned at the beginning of the call, in June, the team launched a really interesting product called Geyser, which was essentially an incentive program that provided and distributed ample rewards from the reserve of the Ampleforth treasury for users who supplied ample ETH liquidity on Uniswap, which is a decentralized trading platform. This had the result of stacking 3 incentives on top of each other. The first incentive was, as a user, if I provide liquidity for a trading pair on Uniswap, I'm now receiving income as an LP, a liquidity provider. I think it's around 30 basis points per trade, which goes back into the pool, and I can withdraw that when I'm ready to exit the system. The second incentive here is the more liquidity I provided on Uniswap, it would recognize that in the Geyser rewards. So the more liquidity I provided, the greater share of rewards I would earn from Geyser. And then third, the longer that I provided liquidity for this trading pair on Uniswap, the greater my share of the Geyser rewards would also be. And so it was this idea of stacking these 3 incentives on top of each other, LP income, share as a result of the size of the liquidity I was providing, and then the length of time that I was providing this liquidity, that would allow me to earn and recognize these interests from participating in this system. And we think that the power of these incentives kind of had some really interesting secondary effects. So first is that it created a very liquid and deep market for Ampleforth in ways that just didn't previously exist. 2, it bootstrapped this rabid community of users who were excited about what was going on with this economic system. And then 3, as more people became familiar with what was happening with this economic game, it provided more opportunities for folks who wanted to engage with the system more than just providing liquidity to do so. And we can talk a little bit about ways that people can participate with the Ampleforth system. But the idea is that with more players at steady state, it may end up leading to a greater probability that steady state is reached. The second demand driver that we honed in on was this idea of short-term speculation. It's kind of a piggybacks on the first demand driver, but it's this idea that we called it FOMO, hot potato trend trading in the piece. But it's this idea that as the asset itself gains momentum, you're going to start to see more speculation and speculators pile into the system, hoping to kind of make a quick buck. So you see this as just a massive enthusiasm that happened throughout July, and it typically leads to a very similar falling effect as the short-term speculators pile off the bus. And I think the point that Steve and I made in the piece that I think is important to point out is that, for commodity monies, we've seen these rise and fall characteristics in the past. I think Bitcoin is a perfect example. And it's important that we don't pass judgment over the course of like a 30 to 60 day period, but that we keep revisiting these economic experiments over time to see how resilient they are across longer periods of time. And I think if we zoom out and we look at, the rise and fall effects of the price of BTC over a period of time, we'll see that it trends in one direction, and that's up. The third demand driver for Ampleforth, and this is one where we think the most interesting conversation will lie in the long term, is Ampleforth's rising economic utility. And so it's this idea that no matter, and I think a lot of projects in the DeFi space are finding this out today, but no matter how compelling your incentives are, or how compelling these short-term demand drivers may be, it's not so much that those will always be the enter into the funnel for these systems, but it's really the longevity of these things as economic products that are going to make people stick around and want to participate with the system over much longer periods of time. And for commodity monies, the idea is that the short-term speculation will soon start to falter if the asset itself is not offering any commodity money or economic utility as a commodity money. And so I think this is probably a good point to maybe zoom out and talk a bit about commodity money experiments more broadly. I think we can talk a little bit about how our perceptions and ideas of commodity monies have changed over the course of time. We can talk about different monetary experiments like fiat money, which is like USD today. Paper claims on commodity money, which is USD pre-1971 on the gold standard. Commodity money themselves, like gold coins, and then digital money with Bitcoin and some of the derivative experiments that have happened around Bitcoin, where folks are using kind of the same economic design of Bitcoin as a fixed supply, but iterating on other design features like privacy or governance or consensus mechanism. And then why Ampleforth may deviate a little bit from that, as it starts to kind of iterate on supply and the economics of supply itself instead of some of these other design decisions. And so, steady state, we believe that these experiments are actually great for the competition for commodity money. And we really do believe that it's just going to end up creating better forms of money in the future, even if it's difficult to see what that may look like today. And there's all sorts of secondary and tertiary effects that will happen as a result of these competitions. That may make it difficult to map our legacy vision of what money is to what it could look like in the future. So Steve, maybe this is a good point for you to chat a little bit about that.
Sure, yeah, I mean, and this is our last slide. It's just this concept of unbundling the functions of money, right? So, those who've been in the space for a while, like you've seen these before, right? Unit of account, medium of exchange, store of value. These are kind of like three of the primary functions of money. And we, historically, if you think about the US dollar, right, we've wanted it to kind of have all three of these functions, but you can also unbundle these functions. And that's kind of one of the interesting aspects of Ample is just think about it as a unit of account. So the idea is that this target price should move with inflation. And so that gives it some really interesting properties in terms of pricing goods. So basically being a unit of account for other items in the ecosystem and maybe just in the world at large, where the idea is like this candy bar costs 1 Ample. Well, let's say there's a bunch of inflation over the next 10 years. Conceivably, the candy bar still costs 1 Ample 10 years from now. Which is different from a medium of exchange saying, yes, I'll take Ample in exchange for the candy bar, which is different from the store of value, which says I'll put this Ample in cold storage and then I want to buy a candy bar in 10 years. And even if I think one thing to emphasize with Ampleforth is that even if the price is stable, that doesn't mean your wealth or the value of your holdings is stable. And we've seen the market value, the aggregate market value or network value move around a lot, right? Because of these rebasings, like you put 1 Ample in cold storage and you pull it out in 10 years, it could be like 1/10 of an Ample, right? If there was a bunch of negative rebases, or it could be like 200 Ample if there was a bunch of positive rebases. And so you'd almost want to engage in like a forward contract for Ample if you're looking to have it in 10 years. And so, I mean, this is not, the functions of money have been unbundled previously. There's a fascinating NPR piece on Brazil. So Brazil, as many of you know, probably had massive sort of hyperinflation in the late 80s, early 90s. And the way they solve this, I think it points to this idea that it's psychology as much as anything else. What they did is they created a new unit of virtual currency called the URV, unit of real value, and it became the unit of account. So there were no URVs circulating. They were still on the Crucero or whatever. But all of a sudden, everything started getting priced in URV. And then pretty soon the population psychologically sort of accepted URV as a stable currency. And then they just swapped everything out kind of one night. So that's like a very short version of what's a very interesting longer story. So you could Google like NPR Brazil URV, and I'm sure you'd come up with it. But maybe I'll pause there, Lou, and stop sharing my screen to see if you've got questions or if there's others.
Sure. So we'll open up for questions in just a moment. So thanks for those comments. You're super interesting. I really learned a lot. So I appreciate that. And so today, I mean, you said that it's not a store of value, obviously, because you don't know how many Ampleforth you're going to have in 10 years based on all the rebasings. But the hope is, I assume that there will be demand for what is in the long term trying to be a store of value and a means of exchange. And if in fact they're successful at doing that, there will be lots of global demand for Ampleforth. And the only way to create new Ampleforth is to give it to the existing holders of Ampleforth, and then they'll sell it. So theoretically, if you put it in storage for 10 years and it worked, you'd have a lot more Ampleforth.
Yeah, it's. I think that's right. Is that people are betting long run on this stability mechanism, right? In the sense that it trades roughly within the equilibrium band, and then maybe there's a shock to demand, right? So maybe it gets integrated into a new app or something like this. And all of a sudden there's demand for more Ampleforth, so it kind of pushes it outside that band to the upper end. New units are created, they're sent to market, and then it moves back within the band. I think that would be sort of like the ideal scenario that we would hope for someday. But in the meantime, much like the price of Bitcoin is very volatile, the market cap of Ampleforth is going to continue to be volatile because people are speculating, right? People are speculating either short-term or long-term on the probability of that outcome. Because, if we achieve that, it's potentially the market cap could be very, very high. But if we don't achieve it, the market cap could be, even much lower than it is today. I guess I probably should have mentioned the standard disclaimer at the beginning that none of what we're saying here is investment advice or legal advice. We're just trying to provide some context on the way people are thinking about this asset.
Sure, appreciate that. Okay, so we're going to open it up now to questions from the audience. And our first question again, if you want to ask a question, put it in the chat box below. And if we pick your question, we'll let you know and we'll bring you up as a panelist. And so our first question comes from John Lester. Hi, John, welcome.
Hi, thank you so much for having this event. This is really interesting. Just a simple question.
And just real quick, John, I'm sorry. What's your interest in Ampleforth and where are you calling in from?
My interest is in the broader ecosystem of stablecoins, and in particular, good long-term stores of value that also offer passive income opportunities. Really, I have a simple question. The market cap for Ampleforth went from 600 million to 130 something million in less than a month. That's pretty crazy. Could you explain how that happened and why?
Sure, I'm happy to tackle this. Thanks for the question, John. And look, it's no different than what we've seen in other cryptocurrencies. I mean, in advance of it being 600 million, it was, 10 or 20 million, right? And so it had this huge run up and huge decline. We've seen it in Bitcoin, right? Like, thousands of percent increase followed by 80 or 90% drops. I mean, we saw it in 2013, we saw it in 2017. Like it's something we have seen in other currencies. And in all cases, it's effectively the same cause, which is just change in demand, right? So the importance of the thing to understand about Ampleforth is like, it's not the supply changes that are the predominant mover of value in terms of market cap. It's changes in demand. If more people want to hold it, the market value is going to go up. If less people want to hold it, the market value is going to go down. And so it's actually quite similar to Bitcoin or many other assets in that feature. The difference is that the volatility is pushed into the number of units rather than into price.
So so on the other hand, it says it's trying to be a better stable coin and pegging to itself around the dollar. So that seems contradictory when you see swings of, when you're having the same kind of volatility as Bitcoin or even more in terms of market cap. It's just confusing to me.
Yeah, so I mean, it's much younger than Bitcoin, right? So I mean, we're often seeing higher volatility in the younger assets. I would say that when you think about stability, they're really referring to price, right? And so I would agree with you that if you look at value of your holdings or value of market cap, there's still quite a bit of volatility. There's this concept that like you can't really get rid of financial risk, you can only move it around. And I think in this case, it's moved around in the sense that it's moved into units rather than into price. And so then the question is like, is that a useful thing to do? And the answer is maybe, because to the extent we can use price as a unit of account, maybe you want to move the volatility into units rather than price because it allows you some additional features. I think it's still early days, so we haven't seen how this thing is going to evolve. But the short version is that I think we're in agreement, actually, that the volatility of the value is still present. It's the stable part, and again, I don't think they describe themselves as a stable coin, but the idea of stability is more around the price of the asset rather than market cap or your total wealth.
Yeah, I just hear a lot of also confusion from people in general when, the idea of opening your wallet and seeing the amount of something that you own changing wildly every day from a product perspective, no one can get their head around it. From an economist's perspective, it's interesting when you talk about value and how it's distributed, but from a consumer's perspective, it seems, from my own experience and from people I talk to, it can be exhilarating and then depressing because you just see number go up, number go down.
Yeah,
and John,
I think
go ahead, Steve.
No, I was just going to say, like, I totally agree. Like we said, there's nothing, we haven't really seen an experiment like this previously, just because like it's a function of the programmable nature of these currencies. And so the psychological aspects of this thing are totally unstudied to some degree. And so, yeah, I expect there's going to be a lot of more work on exactly what you just said, which is like, from a psychological standpoint, which at the end of the day is really important for money, like what are these changing units doing in terms of the way people perceive the asset and the way they want to hold it or don't want to hold it? Like, I think there's a lot of questions to be answered there.
Yeah, and just to add to that, John, I think it gets back to the three demand drivers to actually hold and use Ampleforth. It's clear that early days, it's really those first two, the power of incentives and short-term speculation, that are driving the willingness to hold or not hold this thing. To your point though, John, it's this idea that to be sustainable and for this vision of Ample to be a commodity money, there's going to have to be some real economic utility that's valuable for folks within the system. And so that economic utility, I think, still needs to play itself out. And I think we're still far away from what that may or may not look like, just given the volatility of what we've seen in both price and market cap. But it's this idea that at some point that cross will have to be made, that jump will have to be made to real economic utility for a system like this to actually be valuable. And so that's the thing that I think we're studying and we're trying to understand and grapple with ourselves.
That'll be interesting.
Okay.
Interesting experiment. Thank you.
Thanks, John. And our next question comes from Mark Ward. Mark?
Hey guys, Mark here from Proof Systems, and yeah, my question was, so
Where are you calling in from?
I'm actually out of Tampa, Florida.
Okay.
So we got good weather today. But yeah, so my question is really, so if you have the same amount of AMPL and you're really just in for a long-term hold, you're really not going to accumulate value other from the market cap of the entire AMPL universe growing in general, but you would need to be staking or buying in more to gain, because if it just continuously rebases every day, doesn't your equity technically stay the same?
So yeah, it's a great question. And I think that as a long-term holder, what you're betting on is just increase of demand for the asset. Like, let's say you didn't do anything in terms of staking, or like you bought some AMPL, you kept it in your wallet and you're going to hold it there for 5 years.
Okay.
What you're betting on is increases of demand for the asset, right? So increases of demand push the price up. That creates more, the rebases then create more units in your wallet, right? And so like people who've held since sort of like pre-Geyser, right? So say you bought in June when it was around $1, right? You bought 100 units, and then there was this massive spike in demand in July, and like your 100 units might have turned into like thousands of units, right? And then now there've been some negative rebases and it's declining again, although it's not nearly back to kind of where it was. It's still like 10x, you know, where it was in mid-June. So the short version is like, you benefit from more people kind of entering the system and buying the asset. And I mean, again, just like many cryptocurrencies, if there's more demand for it, the only difference is it's not going to manifest in price, right? So let's say it's $1 right now, and in 5 years, it's still $1. That doesn't mean like the actual value of your holdings might be substantially higher if you bought 100 units and now you have 5,000 units. Right. So that, I think that's the piece to wrap your head around, is that the action is all in the number of units. The action is actually not supposed to be predominantly in price.
That makes sense. So then that leads to the point that Derek's making, that once you really drive a utility for the token and drive positive trading all the time, you're going to see positive rebases, and really everyone's going to be happy at that point.
That's right. I think to the extent it gets integrated more broadly, which sort of creates some like organic sources, I think what you need though is demand, not just from speculators, right? Because that demand can be fickle. It can move in and out very quickly. I think what you're going to need to see is demand from people that want to hold it, that want to use it. Sort of like more organic sources of demand is what ultimately would be the factors that would drive this thing higher in the longer run.
And the economic utility may be something like used as collateral for decentralized credit facilities. It could be, you know, it could be a unit of account. It could be a medium of exchange.
To be held as collateral, right? I mean, that's super interesting, right? So if you put it in, you know, and you lock it up,
mm-hmm. It's mind-boggling.
Theoretically, you know, when right, the value changes, you know, and the volume changes, none of these, you know, whether it's Maker or, you know, Aave or, you know, with, you know, Compound, you know, whatever, none of these are able to deal with that today.
Yeah. So there's two parts to that Steve and I have talked about. The first is that there's going to have to be some sort of reduction in price volatility that will only come with steady state before, I think, before some of those risks are mitigated of just like these wild fluctuations in price stability. The second part is that once that is dampened a bit, I think there's probably like that's a calculus that I think these systems may be able to make or not make, right? And I think at that point, just the question is then on a scale is a collateral like an AMPL, given some of like this volatility, more valuable than other pieces of collateral, or are there other trade-offs that we're making by accepting this versus like a USDC? And the answers to these questions are really difficult, and I don't think we have them. I think the experiment is that, and like the study of what's going on here is more just, this is fascinating. There's been some design decisions that have been made in that are pushing this idea of monetary experiments even further than they were 3 months ago, a year ago. And I think it's important to just track and follow these and understand what's good and what's bad about these systems, and to keep having public discourse and dialogue about this, because I think it will improve better forms of money in the future.
The one other thing I would just quickly add is, the decentralized derivatives are also still fairly young, and we're seeing a ton of innovation around new options platforms, futures platforms, forward contracts. And I think when that stuff starts intersecting with Ample, it gets really interesting, because then you really can bet more on the price than the number of units, right? So if you buy a forward contract for 1,000 Ample in a year, that's very different than buying 1,000 Ample now and holding it for a year. And so I'm really excited to see sort of like how that innovation plays with Ample system design as well.
And are we at the will of the developers of Ample to that, or are Ample holders, do they have any type of governance vote that they're allowed to vote on proposals or do anything like that?
So I think this is where, so the short answer to your question is, it appears, and this is, I think these are great questions, and like these are the questions that should be lobbied to the team and trying to understand and parse out exactly what the plans are. But it appears that from the public stuff that they released and how they talk about it, the Ampleforth system and the Ampleforth team is committed to what they call a rules-based approach instead of a community governance-based approach. You start to see kind of these derivative experiments that are going the more community governance approach, and I think there's trade-offs there that have to be analyzed. But it appears from like the documentation and how the Ampleforth team is talking about the project, that they're trying to write themselves out of this thing and have this thing operate based on rules that are credibly neutral, as opposed to at the whim of changing parameters by community vote. And I think there's pros and cons to all of these things, but these are the types of questions that need to be asked and need to continually have.
Well, it's all interesting, man. Y'all are making me understand it a little bit better, and y'all have answered my questions pretty well. And it's all exciting. The world of DeFi, right? This is
never a dull moment.
Your blood pumping.
Thanks a lot, Mark. Our next question is coming from Robert. Robert? You got to unmute.
Hey guys, thanks for putting this together. This adaptive space is pretty wild. I've got two questions. I'm a VC out of Boston, pretty active in the space. One of the things that in looking at these adaptive systems, what you realize is it's kind of like facial recognition software, right? You could have the best damn facial recognition software, but if you only show it two faces, it isn't going to work. And I think that a lot of these adaptive currencies work with a lot of scale, a lot of demand, and that oscillation band as they catch up and respond to the market. In the early days, it's just not enough. There's not enough throughput. There's not enough demand in the system. So, I'm wondering, have you guys kind of quantified that at all? Because I really do think that that's ultimately what happens here. What I like about what Ample did was they did a really good job setting expectations, right? They said, look, near term, it's a what do they say? Near term, it's a diversifying asset, and kind of medium term, it could potentially be used as collateral, and long term, it could be used as a long-term store of value. And I think they understand that, these systems need a lot of throughput. So I'm wondering if you have any thoughts on that, or if you quantified it, if you thought about it in terms of float versus market cap, or any of those kinds of things.
Yeah, I guess the immediate comment I would have is that one of the things that a lot of young assets suffer from is either low throughput or low demand, but also I think more importantly is lumpy demand, right? So we went from, this thing not really being on many people's radar 60 days ago to all of a sudden everybody talking about this thing in July, and just demand massively spiking. And we've certainly seen that in other assets as well. And now it's starting to obviously move back in the direction of where it was. I think the interesting thing will be where does this thing level out, right? So as we've seen, in the paper we talk about Bitcoin, the idea is it has gone through these big demand spikes followed by large declines, but each time it sort of levels out at a higher level, right? And after the 2013 spike, it declined a lot, but it leveled out a lot higher than it ever was before the spike. And then in 2017, it ran way up, and then it dropped all the way back down to $3,000. But it never touched $1,000 like where it was before the spike. And so I think it'll be really interesting to watch where Ample levels out as some of the short-term speculation fades. And I think to your point, it really does, it needs more participants that are either planning to hold long-term or use it in some way. And again, I would just say I do think the advent of derivatives in this space is gonna impact that. And so I don't have any specific quantitative models to point to, but I will be really interested from a quantitative kind of metric, is just kind of looking at where this thing levels out and returns to the equilibrium band, right? So we were way outside the equilibrium band to the high side, market value shot way up, and now we've been outside the equilibrium band to the low side, and it has gone through this cycle before, right? And it leveled out at maybe, I don't know, 10 million, or Derek, you might have a better sense of where it was kind of in steady state back through, the earlier, 2019 and early 2020.
That's about right.
Yeah. So the question is when it levels out this time, does it go all the way back to 10? Probably not. I mean, there's a lot more people paying attention to this thing. There's a lot more people participating. And so it'll be interesting to see kind of where it levels out. And then if there's a catalyst that sparks more demand in the future where it goes through a similar cycle. I mean, I think the outcomes for all of these commodity monies are so big if they eventually work and are widely adopted, right, in terms of mainstream, that you're going to see these big cycles kind of repeatedly in all of these really young assets as they go through the maturation process. And so the key indicator for us is when this thing returns to the equilibrium band for an extended period, kind of where has it leveled out by the time it reaches that degree of stability.
Yeah. I'm curious. So we invested in a project, and I put it in the chat, called NDAO. It's also an adaptive currency. I'm wondering if you guys have seen that or compared it. It's built on Cosmos, and it also has a target price, but the target price actually climbs over time, and it's proof of stake, so it has a staking reward kind of thing. I'm just wondering if you guys have seen that, how you think this compares to that. It hasn't quite got the the limelight that Ample did, but it's very, very similar in a lot of ways and very different. It has that supply elasticity.
Yeah, I'm not familiar with it, although I will say we've definitely seen more and more activity around Cosmos, around DeFi on Cosmos, around Cosmos generally. And the Ample price also the target price also conceivably climbs over time. It's just tied to the CPI, but I'll definitely take a look. I think we're seeing tons of experimentation around this supply elasticity feature, and it's not going to be the end of it, right? So we're going to just see this more and more as people try to figure out what is this thing good for? What different things can we do with this that we couldn't do before? And that's what makes the space exciting.
Have you looked at Based?
Yeah, that's another one, right? That's right.
We have looked at Based. I mean, Yams had a supply elasticity component, Based. I mean, there's all kinds of experimentation going on around this feature right now. It's really exciting. It's hard to keep up with all of it.
Okay, thanks for the question, Robert. Stephen, Derek, I said we'd keep it to an hour, so we're an hour. thanks a lot for the time. I thought it was a terrific call, and thanks everybody who dialed in.
Sounds good. Thanks,
Thank you.
Lou.
Thanks for having us, Lou.